Good morning dear learners, and welcome you all to the next lecture of my course on financial literacy. I, Dr. Vandana Sonkar, Assistant Professor, Faculty of Commerce, welcome you all to the next lecture of Module 4, various types of loan facilities offered by the bank, and the topic for today's discussion is microfinance. In this lecture, we will be going to cover the following topics, that is the history and concept of microfinance and the various types of models under the microfinancing schemes, the features of microfinance, its various advantages and challenges that the microfinancing institutions are facing in our country, as well as the regulatory requirement that microfinancing institution and banking institution need to fulfill for the purpose of providing microfinance facilities to the urban as well as rural, poor and underprivileged people of the country. Now, let us first understand what do we mean by the microfinance services and how it is different from the other facilities or loans that are offered by the banking institution. Basically, all those individuals who are not financially included and do not have the banking facility, that means they do not have any bank account with them, they can take the help of microfinancing institutions and they can fulfill their short term, long term and medium term financial needs and objectives with the help of all these services. Basically, microfinancing institutions are the different kind of institution that aims at fulfilling the financial need of rural poor as well as underprivileged urban people who are trying to fulfill their economic needs with the help of pursuing any kind of economic activities. So, for the purpose of providing them small business loan as well as personal loan, the microfinancing institutions are trying to remove the economic challenges that they are facing. Basically, microfinance can be defined as a method with the help of which the different kind of loans can be extended to all those people who are financially excluded from the financial system of the country by giving them conventional lending options from the financing institution. So, basically, whenever any person is unable to obtain loan from the traditional sources means the banking companies, if you do not have any bank account and you do not qualify due to not having a proper or good credit history and credit worthiness with the bank, if you are not qualified for taking the financial loan from the banking institution, you can take the help of microfinance. So, all the people who come under the low income category and do not qualify the various criterias for taking the loan from the bank, they can take the help of microfinance. Basically, these are specifically designed for all those who are excluded from the conventional lending options. That means the various types of bank loan which come under the secured and unsecured category, they cannot avail all these types of loan, then they can take the help of microfinance facility. In this, the borrower receives a collateral free loan with easier terms and conditions, making it an attractive option for low income group or small business owners who may not need the requirements of the traditional lenders. So, if you do not want to pay higher rate of interest to the banking institution or individual lender, you can take the help of microfinancing institution and you can, on easier terms and condition and lower rate of interest, you can fulfill your immediate needs of financial crisis. Basically, accessing loan from the conventional financial institution may be challenging for economically disadvantaged individual, as they may not be literate enough to apply for a loan from the banking institution, as well as they do not have awareness that the banks may be providing different kind of services to them. So, in such cases, the microfinance provide them an opportunity to take the financial help to start a new business and create a their livelihood and increase their income, as well as saving to build a more financially secure future for them. So if we talk about the history and evolution of microfinance, from where the topic or the concept of the microfinance has originated, then we can discuss that in the 1970, very famous economist, Bangladeshi economist Muhammad Yunus has established a Grameen Bank in the Bangladesh that became the significant provider of small and short-term loan to the urban poor as well as rural poor for doing various kind of economic activities. So these services at that time had been defined as the microfinance services. So basically it developed over a time to meet the variety of demands of the lower income group and underprivileged society. So ancient lending practices, when they were not capable of fulfilling the demands of the lower income group, then the Nobel laureate Muhammad Yunus has established a Grameen Bank, and with the model of their self-help groups, they created a kind of group with the help of which a small amount of saving of individual can be pooled together, and that can be used for advancing loans to meet the short-term financial needs of the small businessmen, artisans, handicrafts and other type of workers in the rural and marginalized area. So in our country, we work with a self-help group model of the microfinancing institution, whereas Comila model is used in the Bangladesh. There are various other type of non-government organizations also that work as a microfinancing institution, and commercialization of the microfinancing institutions are done, as the banking institutions are also now entering into the business of microfinance, and the digital revolution and mobile banking have given a great pace of acceleration and growth to the microfinancing services in our country also. So we can see from the ancient lending practices, now we have a very developed model of microfinancing services in our country, with the help of which the marginalized section who is not literate enough to take the services of the bank, they can take the help of microfinancing institution. And now the banks are also having a different wing that performs as a microfinancing institution. So they are also now focusing on the underprivileged society for providing and fulfilling their small and short-term financial needs. So the various types of microfinance loan may be categorized under the category of microcredit, microloans, microinsurance and micro saving. As the name suggests, all these different type of microfinance services may fulfill different objectives of the individual borrower, such as microloans basically are the unsecured loan that are provided to the small businessmen who may be in the undeserved areas, they may be from the marginalized section. So the main goal of these loans is to help them by providing them financial support, that in case if they are not capable of taking those services from the conventional banking system. So these type of services are basically focused on granting them small loans for supporting their business activities. Then comes micro saving. These are the saving accounts that are opened for the marginalized section, and a very minimum marginal balance requirements are there. So these are basically designed for the purpose of marginalized poor section of the society, and it allows the entrepreneur to earn interest while promoting the responsible financial management in the rural and the underprivileged section of the society. Then comes the microfinance services. Microfinance services, by offering a very lower premium payment from the consumer, they provide them standard insurance products, with the help of which the microloan borrowers can secure insurance coverage on the business and the asset that they are having, and it will provide a protection against the unexpected events of their business and their lives. So microinsurance services are also a part of the microfinancing. Then remittance services are also included in the types of microfinance services. So by providing the remittance services, it helps the individual to send or receive the money across the border. If you want to expand your business and you want to pay immediately to your other counterparty, you can take the remittance services of the microfinancing institution, and this is particularly helpful for the migrant workers who are working abroad and they want to provide or send money to their families in the rural areas of the country. So, these are the various types of microfinance services. Now, let us understand specifically in our country how the system of microfinancing institution works. So, basically the microfinancing institution in our country works on a self-help group model, that is a bank linkage program for the microfinancing institution. So, in this particular model, the individual or a group of 10 to 15 persons who belong to economically disadvantaged group, specifically women or any other category, they can regularly contribute to a common saving pool. That means with the help of investing their small amount of savings into a common pool, they can create a large amount of fund, and that fund can be used to advance loan for their different individual group members at the various points of time. Then these types of savings are provided as loan to the group members only. Additionally, members can access bank loan for income generating activities also. The self-help group bank model has proven to be very effectively in our country, as it plays a very significant role in empowering the women across the India in the rural areas and in the urban marginalized section also. So, this particular model helps a group of people to come together to save their small investments, and with the help of those small savings, they can fulfill their long term financial needs by advancing a loan to the group member at a time. Then microfinancing institution primarily focus on delivering the microfinance services that we had discussed in the earlier slide, that is the microcredit, micro savings, micro insurance, remittance services and other products. They serve as intermediaries between mainstream financial institution and the impoverished. That means along with the banking institution, the MFIs mainly focus on all those sections of the society who are not financially included. Then it secures the financial resources from the traditional banks and use them for assisting the low income groups by providing them financial support. So, it offers services like opening the saving account of the consumer, giving them insurance products and remittance services. So, it basically provides support by providing the financial aid to the consumer, but in certain cases the MFIs also provide with the training, counseling and guiding services to the small businessmen, entrepreneurs, artisans as well as rural farmer in the rural areas. So, they may use the joint liability group model where credit applicants are grouped into smaller informal unit of 5 to 10 members to facilitate the lending, as well as training facilities, orientations are also given to these group of members for creating them a good and responsible citizen, and for giving them specific guidance and training for the purpose of doing a particular kind of business activities. So, this is how the microfinancing institution works in India. Now, let us discuss the key specification or features of the microfinance. It aims at providing a small loan amounts to the consumer that may range from a few thousand to a lakh rupees, and basically it fulfills the short term financial need of the consumer. So, short term loans are only provided under the case of the microfinancing institution. So, any small business that need a quick capital, they can take the help of the microfinancing institution. After that, it promotes the group lending. That means it often encourages the group lending where individuals by coming together may form a group and guarantee each other loan by reducing the lender's risk. So, the institutions, the banking agencies, they may have a lower level of risk because a group will be responsible to repay the loan. Not only one individual will be responsible under the case of group lending. So, this may also help the underprivileged society to take the responsibility of one and another, and they can have success in their business activity by having a joint liability there. Then no collateral is required in the microfinancing loan. You need not to provide any kind of collateral security as a guarantee. So traditional form of collaterals are not required under this particular case also. Then next one is it focuses on women. So basically microfinancing institutions have a basic aim of empowering the women in our country. So a significant portion of the microfinance lending and services are directed towards the women of the country and empowering them to become economically independent and to have a successful business as well in their life. Now let us discuss the various advantages. So as we have discussed the services and features, it is very evident that this kind of financing services are very much beneficial for the rural poor as well as underprivileged section of the society, as it helps them to include in the financial system of the country. So it promotes the financial inclusion with all the undeserved groups such as the women in the rural areas, the urban poor section. They can access the services of banks such as opening a saving account, taking a loan, taking insurance products as well as remittance services by having the microfinancing services. It promotes the entrepreneurship also, as it do not only aims at providing or granting loan to the small individual. This also aims at giving them technical knowledge and guiding them on making their business strategy. It also encourages the entrepreneurship among the small business owners to make their business flourish. So many individuals, they use the micro loans for the purpose of starting and growing their business, and it helps them to lead towards the higher income as well as to have a improved livelihood in the future. Next is it aims at reducing poverty. So the next advantage is, with the help of the microfinancing institution, we can very easily adjust the inequalities in the income of the citizen. That means it is a proven tool for the poverty reduction by enabling the individual to invest into business, education, healthcare and any other type of the services. The microfinance has helped to improve the living standard of the citizen. So these are the various advantages of the microfinance services. Now let us see the various types of microfinancing institutions that we have. So there may be non-government organization that work as an MFI, cooperative societies and credit unions. They can also provide the microfinancing services. Commercial banks with the microfinancing wing. So nowadays multiple banks are there who are having a separate microfinancing wings. They also provide the microfinancing services. Then specialized microfinancing banks have been also established by the Government of India and RBI for the purpose of providing the microfinance services. Then online and digital microfinancing institutions are also there. With the advancement in the ICT, now online and digital MFIs have been also established to help the rural sectors of the economy. Then community based MFIs are there. Community based MFIs are basically created with the help of group of a particular community. So a group of 10 to 15 people come together to save their small saving, and they can provide the microfinancing services to their group members. Then rural and agricultural MFIs have been established for promoting rural development and agricultural development in the rural sections of the country. Then social enterprises and impact investors are there. They also work as the MFIs for the purpose of promoting entrepreneurship and innovation in the economy. Islamic microfinancing institutions are there. So in other countries such as in Indonesia, in Bangladesh, you will find out some Islamic microfinancing institutions have been also established for the purpose of providing the microfinance services to a specific section of the society. Then we have certain challenges and opportunities in the area of the microfinancing institution that we need to look into for the purpose of creating a great impact of the microfinancing institution in our country. So these are the various types of microfinancing institution that may provide different kind of microfinancing services to the different kind of societies to have our economic growth in the nation. Now let us discuss some of the companies that in our country provides the microfinancing services to the different categories of consumer. So the very famous and popular different kind of microfinancing institution in our country are Ashirvad Microfinance Private Limited, Arohan Finance Services Private Limited, ESAF Microfinance Investment and Private Limited, BSS Microfinance Private Limited, Cashper Microcredit, Fusion Microfinance Private Limited, Equitas Microfinance Private Limited, Bandhan Financial Services, then Disha Microfinance Private Limited and Annapurna Microfinance Private Limited. All these different type of microfinancing institutions are working into the different states of the nation for the purpose of providing the microfinance services to the different sections of the society. Now, let us discuss the challenges that are associated with the microfinance institution. As in the previous slide we had discussed that there are different categories of the microfinancing institution, but there are certain challenges also that may be faced by these microfinancing institution, and we may need to look into all these challenges for the purpose of eradicating the various types of complexities of these microfinancing institution to have a powerful impact of all these services in the rural areas of the country. So although it is acting as a great tool to provide the financial services to the rural poor and the excluded section of the society, but still there are some challenges. The first challenge is financial illiteracy among the consumer. Basically, by financial illiteracy we mean the consumers, the rural poor section of the society, the underprivileged and excluded sections, they may not be having the proper awareness and knowledge of all the services that are provided by the microfinancing institution to them. That means they may not be aware of the growth and success of the microfinance services and the various types of facilities that they can get from these microfinancing institution, and if they will be unaware of all these facilities, they will also not be capable of availing the benefits of all these services. So basically much of the population of the country is financially illiterate due to certain reasons, and that is why it may not be possible that these underprivileged and excluded sections of the society will be capable of taking the maximum benefit of the microfinancing institution. Government of India is also now focusing on making the awareness of all such programs, and that is why along with the different kind of institutions such as with the help of the Niti Aayog and NISBUD and other type of institutions, they are trying to make different kind of awareness, and with the help of digital platforms also they are creating the awareness about the microfinancing and other type of financial literacy program for the consumer. So we are moving forward to eradicating these types of challenges. Next one is the inability to generate fund. Sometimes MFIs also face difficulties in raising sufficient fund as they work generally for non-profit. So basically they are not working for earning the profit, and that is why the investors may not be very keen to invest into the microfinancing institution. So it restricts their access to the fund from the private equity investors and other market based avenues for the proper funding. So this may also create a problem of inability of generating sufficient fund to provide the microfinance services to the consumer. Next one is the high operational cost. In case of the microfinancing institution in our country, we may have to suffer from high operational cost, as the loan given by the microfinancing institution are generally smaller, and the management as well as other expenses for the purpose of collecting the loan from the borrowers may be higher as compared to the other types of banking and other types of financial services. So operational cost is very high, as well as generating fund is also a complex procedure for the microfinancing institution that may create challenges for the microfinancing institution. Next one is the high interest rate. MFIs charge high interest rate as the loan on the loan that is provided by the MFIs to the local borrowers, and it may also create financial burden and stress for them, and it due to which they may not be capable of utilizing the loan amount into profitable economic activities, and they may not have a secure financial future. So the government needs to revise and think on the various methods with the help of which the efficient utilization of these funds can be ensured, that is advanced as a loan to the different individuals who are the beneficiaries of microfinancing institutions. So these are the various challenges that are associated with the microfinancing institution on which we need to work upon. Now let us see the various key regulations that the microfinancing institution must follow. So the legal compliances and key regulations are also there. Whenever you want to establish or start a microfinancing institution, you need to take licensing and you need to register your institution with the different authorities. So you need to obtain a license to operate as a MFI, and registration is required to go for conducting the business under the scheme of microfinancing institution. So every microfinancing institution in our country needs also to get a license, as well as they also need to have a registration with the different authorities as provided by the RBI and the Banking Regulation Act for the purpose of providing the MFI services in the countries. Then there are stringent guidelines. These institutions must adhere to the strict guidelines that are set by the RBI, including their income assessment, loan repayment obligation and other criteria. So multiple regulations as well as guidelines have been prepared by the RBI and the Act for the purpose of regulating the operational and management activities of the MFIs in our country, and for the purpose of operating in this particular sector, the MFIs need to adhere all these criteria. The next one is the protecting customers' interest. The RBI ensures that every customer of the MFI's institution must be financially secure and safe, and that is why safety and the interest of the MFI's beneficiaries are always protected by the RBI and the laws that are created for the purpose of regulating the functions of microfinancing institution. So these are the minimum regulation and legal compliances that the microfinancing institutions need to comply with for working as a microfinancing institution and providing multiple type of financial services to the different kind of beneficiaries. So with this we can conclude that along with the banking system of the country, we need to have some other institutions also, such as microfinancing institution, that can focus on the underprivileged societies, the financially excluded sections of the society for whom it is not possible to avail the conventional banking facilities of the financial system. So to include them into the financial system of our country and to have a proper and balanced economic growth of the nation, we must depend and we must try to promote the success of the small businessmen, artisans, handicraft and rural farmers with the help of providing them multiple kind of microfinancing services. With this we come to an end of our lecture. Thank you.